Hello and welcome back. Thanks for tuning in this week. Are you ready to go on this statistical extravaganza of real estate data? I sure hope so, because we're going to get into a bunch of charts today. Actually, it's going to be all charts. But first, I want to kind of zoom out on what's happening in real estate and look at the big picture, right? A lot of talk, markets taking off, sales went up, or the market's going down, and a lot of opinions out there. So this week, I'm going to provide some really representative data to kind of show how and where we are in the market. This is all from the Toronto Real Estate Board, the biggest real estate board and the most populated area in Canada, obviously. So it'll be very fitting. So yeah, let's get right into these charts here. So starting with some member data. Now, if the members like real estate, it can't be that bad, right? So this is the Toronto Real Estate Board new members data. And this is, of course, how many new members for each year and for each month. The data only goes back to 2021. And you can see in 2021, the blue lines, of course, we had the most new members come in. 2022, maybe the second most there, it looks like. 2023 next. And then 2024, I think every month has been lower than any previous year on this record here. Now, looking at the most recent month's data there, September in the green bar, it is the second lowest new membership intake out of the last 45 months, or the total records that we have here on this data. So less new members and overall less desire to get into the real estate business. So now that was new members, but we're moving on to total membership in the Toronto Real Estate Board here. Again, same number of years here, or same years, same months, latest data as of September this year. And looking at every year, membership has grown. Of course, 2021, look at the numbers. This is total numbers. It was under 70,000 members by December 2021 there in the blue. Then in 2022, membership kept growing. 2023, same thing until you get to July of 2024. This is when, right there, I have it circled or an oval around it. This is when the membership year over year started to decline, and it has been declining now for 3 months. Again, this is only as of September. I'm sure October data might be out by now. I only did this chart a couple of days ago. But yeah, we're seeing overall membership start to decline the first time in years. So people are obviously realizing, hey, we're not making as much money in this business, or it's harder to make money. This is not a get-rich-quick scheme, so they're choosing not to join. And of course, it costs a lot of money to join and get your license and all the rest of it. Now, most people don't even finish the schooling, but the ones that do, of course, they join a real estate board and a brokerage, and most of those don't even last 5 years. So the success rate is very low to begin with, so a lot of turnover in real estate. Okay, so now that we warmed up with membership numbers, let's get into the actual sales numbers, prices, and all the rest of this. So here we have the Toronto Real Estate Board. This is just the greater Toronto area, Durham, Halton, Peel, Toronto, and York region. This is the average sales price of all residential listings by year. And I pointed this out before. It's been relatively flat. 2022 was the peak, of course. We had those big few months at the beginning of the year, which really drove up that price. But overall, it's been flat. 2024, lower than 2023, a little bit higher than 2021. So flat at best when you're looking at it on a yearly scale. Now, this is all areas included in the Toronto Real Estate Board, and you can see there's 700,000 listings included, where the GTA just had 333,000, so 700,000 listings included here, a lot more representative of the Greater Toronto Area and those surrounding areas that include their data now. So this year, we're actually lower, 2024, and of course, this is only up until November. December still not included, which is not going to be a record-breaking month for sale prices, obviously. Probably going to bring prices down, if anything. But 2021 was 900,000. 2022 was the big year. 2023 just under 900, and now we're down to 891. So very similar, but they have declined by just a little bit this year so far. Now we're going to break it down by the months, going back to just before the peak, and look at the year over year, new highs, new lows. Let's see what's happening here. So I've circled the highest months for the sale prices, for the average sale price for each given year. Now this, going forward in this video, all of this data is all of the Toronto Real Estate Board. So not just GTA and every area that they include in that database. And so 2022, they had a high of 1.11 or 12 million. Then it was down to 944,000 last year, which was April was their peak month. This year, April was also our peak month, but down to 915,000. So you see prices are trending down. We're making lower highs. And of course, whether you're looking on a yearly or monthly basis, we're not seeing those peaks. So anyone that tells you, how many times have you heard, I've said this before, how many times have you heard prices are going up, you should buy now, you better get in now, interest rates dropped or they're going to drop, whatever the case was, there's always a reason. But the data tells us differently. The data says prices are trending down. Now we're going to look at the number of sales. Same data, all of Toronto Real Estate Board, GTA and surrounding areas. This is the last time I'm going to say that. So now all this data is for all the Toronto Real Estate Board, biggest board in Canada. So I think you might have heard in the news, if you follow this stuff, October was like 40%. Sales were up. It was amazing. Sales were up compared to what? Compared to the previous October. And of course they were. The previous October was 10,500 sales. The one before that was 10,288 sales. And this year, almost 14,000. So almost 40%. Certain places had certain numbers differently. I think some people just use GTA numbers. This is, again, all of the areas. And I said I wasn't going to say that again, but I had to for reference there. So of course, yes, we had a good October, but looking at the rest of the months, not so great. But let's kind of look or break down this data a little bit further here. So again, I've circled the best months of the year. 2022, there was 21,843 sales in the best month, which was March. Then May was 2023. It had 20,500 sales. This year, again, May has been our best month, but only 191 sales. So sales are down about 20% in our best month this year. Not so great. Again, shows a declining market. Let's look at the total sales by year. Of course, 2024 hasn't finished yet, but I did include a note there, December 2024 not included. So you can add about 6,500 sales to this number here. But at best, we would be tied for the lowest year in the last decade for number of sales, which was last year. Any other year was higher than that. Even 2014, 156,000 sales. We had, of course, a smaller population back then. We've had millions more people since 2014, but our sales are down. Again, probably tied with 2023 at this point. So again, nothing to brag about. Sales aren't up, prices aren't up, but you've been told differently, and you've been told that they will be going up soon, but we've been told this for years now. Next, on to the number of new listings, inventory, right? Inventory, we don't have enough inventory. So I've highlighted again the peak months for inventory. They all are May. Every May, springtime is when the most new listings come out. And again, this year we've had more new listings than any other year. More than 2022, 40,279, more than 2023, 37,561, and this year again. And I say this with the national data too, we're getting higher highs with the new listings, and we're getting lower highs also. So the low months are also getting higher. So you'll see lots more new listings, and that's just going to continue as more investors try to get out of the market and dump their inventory. Now, looking at new listings on a yearly basis makes it even more of an extreme environment when it comes to inventory. We are now by far higher than any other year in the last 10 years as far back as this data goes, and it's significantly higher. This isn't just a little bit higher. This is significantly higher. We're talking 10, 20, 30% depending on the year. But again, I've included a note there, 8,800 new listings estimated for December. So we're not even done. So we are already higher, and we're not even in December. And once you add that December data, we're significantly higher. So new listings are coming. We've seen this trend happening. And if you listen to my videos, we've kind of predicted or forecasted that new listings would be coming as inventory, as investors dump them, and its speculation slows down and all the rest of that. Moving on to the days to sell. Of course, it's getting longer to sell those properties now. At the peak, you could sell your property reasonably quick, 5-10 days in some areas. Now it's taking longer and longer. 36 days was the average in 2022. And 2022, only the beginning of it was a stellar time to sell. Most of it was in shock from the interest rate increase announcements. But last year, 41 days. This year, 45 days. And we don't even have December's data. So December's data will most likely be higher than 45, probably 47, but we're going to look at that data obviously when it comes. But right now, 2024 takes a lot longer to sell your home than it did any other year of the last 3 years. And on a yearly basis, going back 10 years, you'd have to go back to 2018 for it to take the same amount of time for days on market for your house to sell. So no other year since 2018. And 2018, remember, was not a good year because they started raising interest rates in 2017. And of course, that slowed the market down. So you have to go back to one of those slower years to get to where we are now. And of course, look at the trend. We're trending up. It's going to take longer and longer. So next year is going to be even longer for your house to sell. Okay, next is the close price or the selling price to the original list price, the ratio. So did your house sell for 100% of the asking price or the original asking price? Did it sell for more? And of course, I broke it down by the month here, and the highest month or the peak month was February 2022. That was the peak of the market in Canada, especially in Ontario. 117% homes were selling for. This is the average home was selling for 117%, which is just insane, right? This is the bubble we were in. Everyone thinks this is normal. Oh, this is normal. Prices are never going to go down. Well, yeah, they will. Now, 2023 was 99.9% was the peak month, which is May, and that was still insane for considering what was happening with interest rates increasing, and places were still selling for 99.9% of asking price in May. Now this year, 98.7%. So we're seeing new lows on that ratio, meaning homes are selling for less. They're selling for less from what they're asking. And those bidding wars are obviously losing their steam too, because people still use the strategies for bidding wars just to get a quick sale. But we're seeing more and more of those bidding wars fail, and it's reflected here in this data. And now looking at that same data on a yearly scale, 2024, 97.9. You'd have to go back to 2014 to get a lower number than that, 97.8. So we're at a 10-year low right now for that ratio. So again, doesn't support the theory that prices are going up. Buy now, get into the market. It's not. This is just the beginning of what's to come. Unemployment, of course, still has to increase, and mortgage arrears are increasing. So again, you watch the channel and you know the home buying recipe. But this is where the market is at when you take a step back and look at the big picture. All right, now my second and last subject of the day is the government and how they don't want prices to go down, right? It's very clear. So we have all these things happening. Prices are still going down, as I just explained. But the government, they don't want prices to go down. They want to maintain prices and have small year-over-year increases, 2%, 3%, whatever the rate of inflation is. And the reason they don't want this is because of votes. It's political, right? They don't care about the new generation coming in and not being able to afford a home. They care that the majority of Canadians, 66.5% actually, owns a home. And that's, if prices go down, they consider that 66% is going to be upset. So it's easier to appease those than it is the 34.5% of people that actually don't own a home. But I think they're wrong. I think their reasoning is wrong and their focus is wrong, and let me show you why. So let's start off with the home ownership rate in Canada, and this goes back to 1971. It doesn't show it on the chart here, but it's 1971 is that 60.3%, and it has been increasing. Even through the 80s when we had a bubble there, it was still increasing at a slower pace. The 90s was a depressing time for real estate, increased through the 90s, all the way up to 2011, this home ownership rate increased till it peaked at 69% in 2011. Then they do this every 5 years. I don't know if they do it with the census. I thought the census was 4 years, but this data is a 5-year data, and it's right from StatsCan. Then it started to decline, the first time in over 45 years. Now, if this chart had went back further, there would have been increases before this. It didn't just start increasing in 1971. There was increases before that. But regardless, the first time in over 45 years that this data is available, the home ownership rate in Canada started decreasing. Now, we didn't have a high home ownership rate. We're about midway in the OECD countries, midway in that pack. The States is actually a little bit below us. But again, other countries have a lot higher, over 70% home ownership rates. So it started to decline, and it's been declining ever since. The last data point was 66.5%, and that was in 2021. Now, where do you think it is now, considering we have millions more people immigrated to the country, refugees, all the rest of this, and it was already at 66.5. Home ownership has never been more unaffordable in Canadian history. Of course, that number is going to be significantly lower when it comes out next. Hopefully, we're going to see a number next year to put this in context, but I'm guessing it's going to be down like another 1 to 2%. So we're going to be like below 65% home ownership rate, back to the 90s level or so. Okay, now let's look at some subjective reasoning or theories here. This is kind of just my brainstorming to show how wrong the government is by choosing sides, by choosing the 66% of owners to appease them. And, you've seen it. Trudeau said, well, we want property values to maintain so that retirees can have a nice, happy retirement and all the rest of that. And I would argue that a lot of the homeowners out there, like myself, I'm not an investor. I don't want prices to go up. I actually want prices to come down so families can afford them. Yes, it's going to hurt my business. Yes, there's going to be some clients to get hurt. But overall, I want my kids to be able to afford a house one day and my grandkids to be able to afford a house one day. And by me having an expensive house or paper wealth, what good is it going to do? So I can retire just because everything else is inflated? That's not good reasoning. That's a greedy reason. The real reason is I want homeownership to be affordable for my kids, your kids, and all these other families out there right now waiting to buy a home. And I think it just makes sense, right? But the government doesn't think that. The government wants to give you 30-year mortgages. They want to give you $1.5 million loans secured by us, the people, to keep these prices propped up. They're even trying to convince us that, well, if we can keep them propped up, builders will build more. Well, the prices have been propped up, very small declines as you saw on the yearly scale, and the builders aren't building. The condo projects are defaulting. So that's not going to help. The only way builders can make money right now is if prices increase dramatically and you can go buy a new house in Niagara for $1.3 million, which isn't happening because people can't afford it. So prices need to come down to reset. But let's go through my train of thought here and show you kind of where I was at in my thoughts, and let me know in the comments, what do you think? Do you think, if you're a homeowner, do you think prices should come down? Do you care about your paper wealth, or would you prefer them to come down for your family, friends, kids, grandkids, and whatever else? So here it is, 66% own and 33.5% don't own. This is as of 2021, mind you, so these numbers are actually a little bit different. There's probably more people that don't own now, another 1 or 2% or so. So now we're going to break it down to, of that ownership portion, that 66.5% that do own, how many are end users? Probably 2/3 are end users and 33% are investors, speculators. Now this is being generous. It's probably 20% or 25% are investors or speculators. Again, we're looking at mentality and sentiment here, right? So let's move on. Of the end users, what percentage do you think care if prices go up? We're talking end users, families, whoever it is. Maybe 50-50. I think most people would say, look, yeah, my house is worth $1 million on paper, but my kids can't afford a house and everything's inflated. I wouldn't mind my house coming down 20% because I'm not using the equity anyway. Unless you've done a bunch of equity takeouts, well, of course, that's your own greed. But responsible homeowners, I would say 50-50. 50% would like to maintain or go up, and the other 50% would say, look, for the good of humanity and my children, I'd like to see prices come down. But again, this is my opinion. Let me know what you think in the comments. Of course, the 33% of speculators and investors, they want increases. They don't want prices to come down. We'll give 100% of them, they want prices to maintain or go up. Now, using that data of the people that want increases and don't want increases, 33% don't want increases, and of course the majority, 66.5%, do want increases, which brings us back to the original chart here. In my opinion, again, this is subjective, but the majority of people that either own a home or don't own a home, 55% in my calculations here, don't want prices. They don't want prices to go up. They want prices to come down. The other 44.2%, the speculators and half of that homeowner group that does want prices to increase, they're the minority. And even if we fix those numbers, even if it's 50-50, the government automatically assumes that because the home ownership rate is 66.5%, all of those people want to maintain their values and want prices to go up, at some rate in the future. Where I don't think that's true. There's so many people out there that I talk to. I even put this out on X yesterday, and a lot of people, they claim they own a home and they don't want prices to go up. They would actually like to see the prices come down for the sake of their children and their grandkids and whatnot. So let me know in the comments what you think. Do you think there is a large majority, a silent majority of those homeowners that do want prices to come down so one day their families can afford a home, their grandkids and their kids and whoever else? Or do you think that that entire 66.5%, as the government assumes, wants to maintain prices and actually have price increases? Again, let me know what you think, and until next week, I'll see you then.